Morning, everybody. How are we all doing? Morning, Danny. Good morning, David Anderson, new member. Welcome to the private streams. That's not a new member. Morning, Danny. Morning, Soul Trader. Morning, Wozcheck. Morning, Chris. How are we all doing? 225 of the weekly range on the pound Swiss. So this morning we're going to go through what the hell's going on this week. Try and pick apart this. Look at that. Mad. Yeah, just mental. This is obviously the weekly range, normal weekly ranges. So you can see how much has done. It's not over 225% of its weekly range. Some of this stuff's gone 500%. I've never seen anything like it. The ADRs we've had this week are off the scale. So we're going to look at what's happening with Trump, and have a look at basically the what to do in this type of situation. So obviously there's no precedent for this type of situation. There's no forecasting for this type of situation. So how to make money out of this type of situation. Basically what we're going to look at this morning. So we're going to look at what's happened this week, preparing for the next couple of weeks, because one of the main things you need to consider this week is that your measurements of ADR are going to be completely out for the next fortnight. They are going to be wrong, completely wrong. Potentially, they may not be. We'll go through why. So yeah, just having a look at what the hell's gone on this week, really. Morning, Joe. Morning, FTNet. Morning, Peter. Let's have a quick look at the markets this morning, just see where we are. DAX and FTSE coming down again. So as you can see, the obviously we had a large gap down situation yesterday. £2 trillion knocked off the stock markets. £2 trillion. That's 12 zeros on that. Knocked off the stock market. Absolutely no signs of recovery this morning at all. Yesterday, no chance of a gap fill. And that's the same with all stocks. Everything is exactly the same at the moment. So the markets basically are in absolute panic mode at the moment. You're pulling as a fund or a investment fund, pension fund, bank, any kind of institutional trader. First thing you're going to do is pull your money out of risky assets. Stocks are risky because they are all open to world events, and obviously economics. They drive economics, and economics at the moment is just gone. We don't have it anymore. We've got something new that nobody's ever had before, and we don't know what to do with it. So the money is just coming straight out of the stock market. There's going to be no confidence in any business forecasting. There's going to be no confidence in any business figures released on earnings, because the whole thing is now changed. Imagine, even if, I don't know if any of you run a business, but imagine running your business one day and then waking up the next day and the costs for your business have gone up by 25% or more, but you can't charge any more for your product. And the people you sell your product to have now got 50% less money than they had yesterday. How can you forecast what your earnings are going to be moving forward? How can you value your company in the next quarter? How can you do anything really without a hell of a lot of analytics and maths and time? That is why the stock markets are collapsing, because nobody has any confidence in any industry or sector. Every single sector is dropping: motor, tech, the lot. When that starts to happen, investors see a big collapse. That creates panic, and that makes people sell, which makes the collapse faster. And this is where we get black swan events. So that's the situation we've got at the moment with the stock markets. Obviously, the same thing is happening to the US dollar. Trump has basically destroyed the future economics of the US. This is a normal daily range, as you can see. This is what we normally do on a day, and this is what we did yesterday. So you cannot forecast what is going to happen. We could have another 500% ADR day like we did yesterday on the US dollar Swiss. So this move here, the average daily range on the US dollar Swiss yesterday was 49. Yeah, that did 283 pips yesterday. The average daily range now is 67. So with ADRs, obviously, the average daily range is a calculation of the last X number of days. In my case, I use 10 days. So what I've got now is 9 days of normal, roughly 49 pip movement, averaged into a 500% of the size movement, which means that my ADR has jumped up 20. Yeah, so nearly 50% increase on my average daily range calculation, because it's now sitting up here at 67. Yeah, so your ADR figures moving forward for the next 2 weeks are going to be completely out. If you're risking over ADR, your calculations are going to be out. So you're going to be taking a lot less risk than you actually probably should be, which isn't a bad thing in this type of market. So you've got to bear all that in mind. We do not know whether this type of range is going to become the norm moving forward. It could be that 250 pip days instead of 50 pip days is going to become the new norm for US dollar based currencies. If that's the case, then ADR, you're going to be actually over leveraging because you're going to be taking your risk over 67 ADR when it's actually going to move 5 times that on a daily basis, and it will all normalize and eke itself out over time. But the problem with all indicators, and ADR is an indicator, ATR is an indicator, moving average, stochastic, they're all indicators lag price. What happened yesterday is 1 day out of X number. So if you use your 20 moving average, this is 1 day out of the last 20 that is going to completely skew all readings. Yeah, every indicator on the planet right now is utterly useless to you because it is not going to take this into account. It doesn't know how to deal with this. So you've got to use price action. It's the only thing that's going to work in this type of market. So looking at price establishing ranges and breaking out of ranges, basically looking for price pulling back on distances. Yeah, the thing that is always the same is distance. It's moved that far, it will pull back roughly 30, 50 or 68% of that if it's going to continue in that direction. That isn't going to change. In this case, we've got a flag break, 23 retracement. I probably didn't even get a 23 on that. Be interesting to see whether that actually did do a 23. Yeah, there you go. Perfect. So there's your 23 retracement, which is a flag break. Yeah, to the actual pip. Yeah. So actually not quite to the pip because I've put it in the wrong place. But anyway, close enough. Why can't I grab my fib? There we go. So there you go. That's your 23 retracement there. So that's a flag break short. Yeah, continuation in a strong trend. So this at the moment, it's very, very hard to speculate what is going to happen. It's one of those situations where you need to get into the market and you need to hold on and see what happens. There's nothing you can do about it. So we're going to look at some ways to deal with this type of situation at the moment, but readings are going to be off. Lot size calculations are going to be off. Everything's going to be off, and you can't really adjust to it because we may well, after yesterday, we may well go back to this from today onwards. We may continue to do this for 3 days, 5 days. We may do half of this, and that becomes the new norm. So twice what we used to do becomes the new normal. No idea. No one's got any clue. So it's just you've got to kind of adapt to survive in this type of situation. RSI extensions, it doesn't get down here. Just doesn't get down here. Yeah. This is an anomaly. One of those things you can't do anything about. So Australian dollar today, same thing. We've got the Australian dollar. All the Australasian markets collapsed. 225 ADR overnight. So we'll start off looking at the news and see what's been going on over the last 24 hours. Where do you go? That's all last night, isn't it? So the main thing, basically, fear and greed index down at 11 now. I posted this in the group yesterday in Discord. Morning, everybody. I haven't said morning to you, by the way. Peter, Paul, Ryan, Duncan is met, Virginia. Yesterday was insane. Never seen anything like it. No. I've never seen this here before either. I can't remember. I've been watching Financial Juice feed for years and years and years. I've been watching the Fear and Greed Index for before Financial Juice started publishing it. I can't remember a time I've seen it down in single figures. I can't really remember off the top of my head a time where I've seen it at 11. Even in COVID, the thing with COVID, and this is what I'm likening this to another COVID. In COVID, I think at the point of COVID, we were kind of up here somewhere. And what happened was COVID collapse happened over 3 to 4 days. It didn't get time to get down to here, because by the time it got sort of down to here, we were recovering. Yeah. We've been sitting down here since Trump got in. It has popped up a little bit every now and again, but the vast majority of the time we've spent down here, meaning that risky assets have not been appreciating. The stock market has been dropping since February. Yeah. Trump came out and said in his speech, stock markets are doing great. Everybody else on the planet that's got glasses on that are not tinted by whatever the hell's going on in his head can see the stock market's been coming down since February. Go and look at any stock chart. It isn't going up, Donald. You're an idiot. We've been in fear mode. It's not taken much to tip us over to this. When you get down to here, we just panic sell. Yeah. So what we've seen over the last 24 hours is basically the Fed coming out and saying that we're not going to cut interest rates this year now. So we were looking at a very nice, gradual, steady decline on interest rates in the US from 5.25, weren't we? Down to 4.5. So 5.5, sorry, down to where we are now. The forecast, if you look at the dot plot, was carry on as usual. Yeah. The last 24 hours, the Fed have now said, we ain't changing this anymore. We will probably get one more in April. It's probably too late to change that. Depends. We may well not. I think there's a strong chance we'll get one more interest rate drop on it. But the next move is that we're going back to the 80s where we were having 16% interest rates, because the economics of the world are they're just destroyed unless this changes. If he changes it, fine. If he doesn't change it, we're all screwed at the end of the day. So inflation's going through the roof. Interest rates are going through the roof. Mortgages are going through the roof. House prices are going to collapse. That's basically what we're looking at. Recession, we ain't seen anything like it. So, this is the biggest upset to world order in history, and we don't know how to deal with it. We can't forecast how to deal with it because it hasn't happened before. So, it's a massive nuclear bomb that's been dropped on the financial markets. So central banks and governments are going to be sitting here going, okay, just stay where we are and see what happens. The next week, we've got the Europeans coming out and saying that they're going to obviously come back with retaliatory tariffs. Mexico have already said it. UK is sitting here quite quietly because we only got 10%, so we're going to see if we can ride underneath the wave. But all the other countries are going to start hitting back. Australia is going to start hitting back. Everybody's hitting back. So it's just going to escalate. And all it's going to do is drive the prices of every single thing that everybody on the planet purchases through the roof until we can't afford it anymore, and then it will come down. But by then it's too late. You can't recover from it. Look at pandemic. It's taken us 5 years to get from pandemic to just about getting back to normal. And then another bomb's dropped. Yeah. So the next 5 years, if you want to really do yourself a favor now, sell your house, downsize, get rid of your mortgage, because your mortgage is going to go like that. I am. It's going to be bad if it stays as it is. So we got a 50% chance of a fourth cut this year. That was yesterday afternoon, wasn't it? That dropped as we went through the day. So basically, what's Morgan said? I didn't see that one. Interest rates. So expects no interest rate cuts from the US in 2025 versus the prior forecast of one cut. So Morgan Stanley were on the cautious side. Now they're saying no chance. Yeah. I don't know what's going to happen with the Fed. I don't think the Fed knows what's going to happen with the Fed at the moment. I don't think they ever knew, but now it's even worse. So it's non-farm payroll day today. It's impossible to pick all this apart because it's moving too fast. Every time a talking head comes out from the ECB, for example, the focus changes. So the markets, I think, are going to continue to sell off because there's no reason to buy at the moment anything, is there? You're not going to buy stocks in anything at the moment because there isn't a business on the planet that can forecast what's going to happen. So it may well stabilize where we are. I think there's a possibility of that happening while the market is getting over that initial drop shock, and it will sit there and go, right, we need to figure out what the hell's going on. Just gather as much data as you possibly can, and then we will tentatively start to see if we can make a move in a direction. But they are going to be so unbelievably cautious with all movements at the minute. So, or it's going to be a panic. Yeah, there's only two things going to happen. It's going to freeze or it's going to panic. There's Macron saying the response to Wednesday's announcements on US tariffs will be more massive than previous response. The previous response that the Europeans were coming up with was some kind of massive trade bomb they had sitting there prepared for any kind of trade war, and it was a huge hit that would really, really harm the US. He's saying it's going to be more massive than the previous one. So this is only going one way, and it's into mass escalation. Go with the flow is really all you can do at the moment, and just get on the direction that everything seems to be moving in and hold on tight, because it's very, very probable you're going to see 250 ADR pluses on a regular basis in the next few weeks until those ADR levels stabilize, which is going to, as I say, take a couple of weeks. One thing you can do to try and take advantage of what's going on at the moment is to change the ADR to a different level. So at the moment I use ADR 10, which is obviously looking at the last 2 weeks, because we got 5 trading days obviously in a week. So the ADR 10 measures the last 2 weeks worth of average movement within the markets. If you change your ADR number down to something like a 3, that will change this number dramatically in the levels. So we're sitting at the moment on Aussie dollar CAD, for example, at 57 ADR. If I change that, we now go to 70. So what we're using now is yesterday's big movement, that big movement from the previous day, and a normal day. And we've got a huge day going in here. So tomorrow, or rather Monday's reading, will be this day, and this day. So what we've got is more recent price action size being the norm. So what we're assuming is by using an ADR 3 or an ADR 5, something like that, that we're going to carry on with this type of volatility and this size of movement. So it allows you to adjust your risk to what is happening on a daily basis at the moment. The other thing you can do is remove the use of ADR completely for the short term until things have calmed down, and just move over to an ATR based type of measurement, which is obviously more difficult because you've got to do manual calculations and things. But so if you look at ATR of the last 10 candles, or whatever time frame you're on, it obviously depends on which time frame you're going to be looking at, but you can see how ATR has gone through the roof. The average true range of each candlestick is unbelievably huge. So we're sitting at the moment at a reading of 20. So on average, it's moving 20 pips an hour. Yeah, this thing normally moves 57 pips a day. Yeah, it's moving 20 pips an hour. It's doing 50% of its daily movement every hour at the moment. Yeah, so you've got to adjust everything you do within these realms. When you're using price action, it's very simple because you're looking at what's happening here. And if you're going to go long on this to try and mean revert it, for example, you just put your stop down there and you calculate your stops and everything based on the candlesticks themselves. If you're using automation, typically you're using some kind of automation that uses average daily ranges. These are all out. Yeah. So you've got to be a little a little careful and adjust a little bit. But ATR is a good thing to use. So you can see the normalization of ATR. I mean, this is going to throw everything out for ages, but we're sitting up here at the moment most of the day as an average. We were sitting sort of down here. So, it doesn't look like a lot, but it's double what it normally is. So just be aware, you've got to adjust the way you work. And as I said in the Discord channel yesterday, flat is a position as well as long and short. Yeah, it's not a bad thing to just take a week off and let this thing blow over. You're not going to make any money out of it. There's huge money making potential on these types of moves. Yeah, so when you're taking a mean reversion, and if this does a V-shaped recovery, you're getting a 225% ADR move within 24 hours. Huge potential to make money. But equally, if you get it wrong, you can get killed multiple times. I was looking on the Top Step page yesterday on Facebook, and there was a guy posting a P&L. He took 2 trades and made 10 grand, and he's comparing it to previous P&Ls where he'd made 10 grand over 20 to 30 trades. Yeah, and there were people that were showing 20 trades blown account, 20 trades blown account, because what they were trying to do yesterday with the stock market was buy every time it dropped. Let's try and mean revert it all day long. You will die. It's not going to stop. Swiss yen ADRs, no point talking about ADRs. So yeah, just be very careful with everything you do at the minute is kind of the underlying tone. Reduced uncertainty in inflation would facilitate rate cuts, blah, blah, blah. So they're just saying basically rate cuts, don't think that's going to happen anymore. I would consider a deal where China approves TikTok sale in exchange for tariff relief. Okay, it's basically, he's treating it as an aggressive takeover, isn't he? It's like, I've got this country and you've got that country. I think I'm going to have your country, but I'm not going to fight you for it. I'm going to do an aggressive takeover. I'm going to make it so that you cannot turn me down. It's basically what he's doing. It's all threats and bullies, isn't it? Bullying doesn't work long term. Canadian tariffs on the US autos announced on Thursday will apply to 35.6 billion. We had Spain come out yesterday and put another 14 billions worth of retaliatory tariffs back on the US. So, this thing is like punch after punch, backwards, forwards, backwards, forwards. So, there's nothing you can do really to really forecast anything. So risk reward is the way to go. Traders boost Fed bets, fully pricing 100 basis point cuts this year. What? Who are these traders? 100 basis points of cuts. So that's just come out this morning. Yesterday, Morgan Stanley, one of the largest investment banks on the planet, said that they weren't going to cut the rates. Today, we got 100 basis points, a 1% cut. Can't believe anything, can you? So, yeah. Who knows? Right, so markets this morning. Let's just see what's going on today. So, FTSE going short, but not particularly cleanly. DAX has tried to break long, failed. Now we're trying to break short. So, not really getting anywhere at the moment today. Let's have a quick look at the SIH. So we've got hedge on that looks like an uneven hedge to me. Okay, so I've got clean break short on the FTSE. What's going on there? Okay, so SIH has malfunctioned massively this morning. I've got 1 short and 2 longs on the DAX and just 1 short on the FTSE. Good. I wasn't watching, so I don't know why that's happened. I'm guessing there was maybe a spread issue or something. Weird. Anyway, so today, basically, I'm going to be very cautious with what I do with the US indices. If the ORB strategy is absolutely killing it at the moment, but there is a possibility for a lot of whipsaw today. Non-farm payroll day is always very tricky. We tend to get a rotation day, and it looks like there's a potential for that to happen today. So we tend to sit around waiting for non-farm payroll because the market doesn't want to. So yes, triple stop out today so far. The market doesn't want to move anywhere on non-farm payroll day because it wants to see what the price of the dollar is going to be before it starts any movement. We know what the price of the dollar is, obviously, at the moment. It's coming down dramatically quickly. So we have to wait and see where we go with the indices today. So today's news coming up, obviously, we've got non-farm payroll this afternoon. So it's the unemployment rate for the US and for the CAD. What's going to happen with non-farm this afternoon? No idea. They could completely unwind everything with non-farm. I don't know what the market wants to do. I think it's very, very unlikely. But they may well use non-farm payroll this afternoon and the interest rate, the unemployment rates to start the next leg of movement. So we'll whiz through all the pairs and have a look at where everything is. Obviously, RSIs, there's loads of RSI extensions. We had some single figure RSI extensions on the 4-hour time frame yesterday. Aussie Swiss there, look, is still down at 11. Single figures on a 4-hour RSI just doesn't happen. We're sitting at the moment at 9.01 on the Aussie dollar Swiss. So that's already done. I can't even work out ADRs at the moment because there isn't a measurement. The reason I don't go beyond 225 on the ADR indicator is because it only happens 2% of the year. So you get maybe 5 days, 7 days a year, something like that, where you'll go beyond 225 ADR. Yeah, well, 225 ADR is like a small movement at the minute, isn't it? So this is already today gone 276 pips on a 50 ADR. So we're already over 500% of the average daily range on the Aussie Swiss. I haven't got to the bottom of what this Aussie collapse is about yet. I haven't had a chance to read the news this morning. Let me just quickly look through and see what that was. Do we have Aussie news overnight? No. Construction PMI is coming up at 9:30 as well. Does anybody know what this is about, the Aussie sell-off? I'm assuming this is commodities pairs collapsing. What's the CAD doing? No, it's not. Australia pension funds impacted by cyber attack. Okay. Maybe that's what that is then. That cyber. I mean, that would be red, surely, if that was. When did this move start? That's a 4-hour chart. So it dropped sharply at midnight. 3 a.m. It started to sell off. Oh, sorry, that was yesterday. Oh, idiot. Right, so it basically went straight away, sort of anything between 1 to 3 o'clock. So it looks like it could be related to that cyber attack. 3-year yield down as well. So there's a lot. 10-year yield falls to lowest since December. Okay, so there's a lot. It's just it looks to me like it's just an amalgamation of things. So the bond yields are down. Couple that with a cyber attack and what's going on with Trump, you've just got a huge sell-off. So part of that might bounce back, But the thing with this sort of situation is you can't say, okay, I'll wait till it gets to 150 ADR and then take a mean reversion. It gets to 150 ADR in an hour. You just can't trade it, basically. The only thing you can do in this type of situation is look at price action and use standard risk reward based trading. So go back to looking at 3-bar reversals. Any type of 3-bar reversal pattern with risk reward is going to work if it's going to work, but you have to understand that you're standing in front of a steam train at the moment, and we've no idea if it has brakes or not. If you look at previous collapses, so if you go back and look at the US dollar Swiss collapse back in there, which was, when was that? August. It started very slowly and then it escalated very, 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 very quickly. What we had yesterday was the largest move pretty much sin. If you go back and look at COVID as well, and the speed of the COVID collapse, that was November 22. You got 2 days there, look, which made a total of 487. We did 280 in 1 day there, here yesterday. So there's your COVID collapse. Look, the COVID collapse was a very, very different thing. So that movement there, which was the COVID, the like, holy crap, we're going into lockdown thing, lasted 3 days. It started fairly slowly. We started gapping, liquidity started being pulled out the market, and then we had that quick panic. What we had yesterday was the equivalent of the 3-day COVID collapse in 24 hours. That's how big it is. It's on par with this, except what we saw happen with Trump and his tariffs isn't recoverable at the moment. It's just going to escalate further. So where we had this, if you look at the COVID and what we've got going on with Trump at the moment, this candlestick here is the equivalent of what happened yesterday. And then we had the collapse, because it accelerated. We were like, we think we're going into lockdown. What do you mean? What's a lockdown? Panic, panic, panic. Okay, let's pull all money out of the stocks, and boom. We've had 1 day of that at the moment. What are trade tariffs? What's a trade war? How are people going to respond to a trade war? As soon as Europe come out and go, okay, you can have 250% back, how big's that going to be? If that is the equivalent of the start of COVID, and yesterday is the equivalent of the start of what Trump's doing, how big are the candles after this one going to be? That's the question. So, just go with the flow, go with the trend, don't go against it. Mean reversion is not something you really want to be trying to do in this situation. It may well mean revert. I have no idea. No one does. But I do not want to swim against that tide at the moment, or stand in front of that steam train. So there's no point in really doing an awful lot of analysis today. I'm just going to go through and look at the pairs, basically, just for my own. I'm going to have to go out to a 4-hour chart just because the candlesticks are so massive, just so I can see what type of levels we're dealing with. One thing you can do with the current situation is look for potential bounce points. So there is a possibility, and I say a possibility, that you may find liquidity still sitting in certain areas. Like, for example, you've got these areas here. Typically, you'll find institutional liquidity sitting at those levels. I don't think personally it's going to be there anymore. So you're probably going to find bounces at levels because there will be interest of some description. Don't forget, banks and institutions are still trying to get into moves. So they may well try and get into some moves, but I don't think they'll hold. It'll be the smaller institutions that try things. Banks will probably be sitting there just going, sell it all. Let them deal with it. We'll take the commissions. So you've got a level coming up here exactly where we are now, which is a potential bounce point. But if that doesn't bounce, all the liquidity that stops the move in its tracks and starts that, will be ready to jump ship and flip the other way almost immediately, which will make that much quicker, that move down. So it is a possibility that you might get a nice bounce play. At some point, this will recover. Yeah, the stock market always recovers. Currencies usually always recover. But there's too much uncertainty at the moment to understand, where the US dollar is going from here. There's a lot of people forecasting the end of the dollar. We've been forecasting the end of the dollar for quite a while, since the BRICS side of things started to, happen. We're talking about the yuan, the real, and other currencies becoming more dominant. Yeah, the fastest growing economies in the world are not the West, it's the East. So why wouldn't we want to invest in those currencies and use those currencies? Because their economies are growing faster than everybody else's. So the dollar is like this. And what Trump's trying to do is make it do that when you've got a weight of people that are way bigger, stronger economies that manufacture everything that the US buys, saying, no, we don't want to do it anymore. So, when you see these sorts of moves, you have to sort of go with the flow with it, I think. But there are going to be bounces along the way. So Aussie dollar CAD, not really interested. Aussie dollar Swiss, we're out at new lows. In fact, let's go to the daily charts. Because these moves have all done everything, haven't they? So there you go. There's your all-time low gone. Aussie Swiss. You've got this level here, Aussie Swiss. Dashboards are going to alert non-stop. So that is the all-time low on the Aussie Swiss going back to 2019. We're beyond. Didn't bounce. So again, there isn't a technical trader on the planet now that has any tools left in his box. Yeah. So technical analysis is about looking at levels, support, resistance, zones, that sort of stuff. And obviously market structure. There is no market structure in something that is parabolic in one direction. You can't get on a pullback because it isn't, which is why it's so hard to trade. You can't hit the short button after something like this because every bone in your body is saying this is coming back. This is why it's so difficult and why sitting on your hands is probably the easiest thing to do now and come back when we actually have some structure. But that is now at the lowest point ever. Where does it go from here? How far does it go and how long? No idea. So again, that one's out in the middle of nowhere. Aussie dollar yen. We have got on the Aussie dollar yen all-time low approaching at whatever that is. That is 225 ADR on the day, isn't it? So we're 80 pips away, which is actually 3/4 of an ADR roughly from the all-time low. So, watching these levels, when you get down to these levels on your charts, it's not the all-time low, it's the all-time low, recent all-time low, if you like. Look at that. That's the yen intervention. So this is this is basically the yen intervention low, isn't it? So that's from 2024. So there's that level there coming up. We've got the Aussie New Zealand, not doing quite as bad because it's they're basically the same economy. Aussie dollar, US dollar. We've got a monthly level coming up down there. I mean, if you're going to mean revert, that's all I would look at is just these big old levels, because the chances are we're going to get to them very quick. This is just nuts, isn't it? So yeah, we're 175 ADR Aussie US. CAD Swiss just broken the monthly low. That's already broken out of all-time lows. So CAD Swiss. Yeah, this is lowest price ever. So pretty much, where are we? 60. Yeah, I mean, my chart doesn't go back past 1998. We've never been there before. So that's the lowest point in history, pretty much. CAD yen. So the yen pairs at the moment, again, Japan, big player in tech and stuff. The tariffs are very easy for them to retaliate to because they put the price of everything that is in every device in the planet up, and they start to become more powerful. So safe haven runs, we tend to see yen and Swiss benefit. We're not really seeing that at the moment. The yen isn't driving as fast or hard as I would expect it to. So it does kind of back up what my theory was, that the yen is no longer going to be a safe haven. It's basically sold all of its US bonds to do the intervention that we've had this year. Therefore, there is no, or rather the end of last year, so there's no safe haven benefit in the yen anymore because they're increasing interest rates. The Swiss is probably the one that is the most stable at the moment, but who knows what the Swiss are going to get tariff-wise and how they're going to, well, we know what they got tariff-wise, but how are they going to respond? Their main export is banking. So there's just an impossible situation because you cannot forecast what anything will do at the moment. So I think at the minute we just got to sit and, if you want to take a bounce play, take a bounce play. If you want to try and get in on the trend, try a flag break pullback or a shallow pullback. But, anything that pulls back up to here, you should have mean reverted it. By the time it gets up to there, with all these, if you just assume that everything that's moving at the moment, like it's moving, has done that. If you try a trade there and you try a trade there and you try a trade there, so a 23, 38 and a 50% pullback, and you assume that you're going to break the low with a stop at some point above price action when you see it come down. So you see a reversal alert, take that, stop above the high, try that. If that one doesn't work and that one doesn't work, that one probably will. One of them is probably going to work. And you have to put your target beyond the low and assume that this is all going to carry on. The risk reward on any of these trades is going to be way more than 3 to 1. If you get stopped out 3 times trying to get in on this move, you've got to be ready to hold it long term for days, maybe longer, and just hold it to get that massive reward on it. Because these 3 R's that you would normally go for in most trading 5 R's and that when using stop loss risk reward based strategies, which typically have a zero sum edge, because the market normally goes up and down and stops you out all the time, you are going to get stopped out on them, but the rewards on them are not going to be 3R. They're going to be 10s, 15s, 20s. Those are the types of trades you want to be looking to try and get into, and you've got to be able to sit and hold them. Mean reversion wise at highs and lows, it's just blowing straight through monthly levels. Look, straight through it. Not interested. It did stop at it yesterday. Look. So all the limit orders there triggered yesterday. They all run over this morning. Next one is here. And that's exactly where we're bouncing now. So this pullback on the euro pound right now, we've just had the limits trigger on it. So look at the move we've just had, which is from yesterday. Buy it somewhere in here. If it gets there. It might not get there. But if it gets into here, you're pretty safe. Stick a stop loss maybe at 50 or that propulsion gap there, below that propulsion gap. Give yourself a nice 60, 1.8 retracement on it. This thing could go through the roof. The tariffs from Europe that are coming out next on the 9th, which is, they may announce them quicker, next Wednesday. So next Wednesday, if those new tariffs combat the US are killing the US, the euro is going to go through the roof, isn't it? So that's the sort of play. You need to be on stuff and holding it long term in this type of situation, and just assume that this thing is going to be a long-term collapse of the US dollar and the stock market. There's got to be a beneficiary. If you think about how world economics is made up, you've got the stock market, you've got commodities like oil, and you've got other commodities like gold, etc. You've got stocks, you've got Forex, there's crypto, there's all sorts of stuff, isn't there? But basically, there is a finite amount of money available in markets. Yeah. When you pull money out of something, it has to go somewhere else. Yeah. Because you've got to put it somewhere. So even if you were like a multi-millionaire investor, say I was a 10 million net worth investor and I had 10 million out there in investments. If I pull all of my investments out of the stock market, out of oil, out of gold and my commodities, I've got to put it somewhere. I have two choices. I either liquidate it into capital, into cash, i.e. my currency at the moment is the pound. So I would buy pound. So I would sell all of this, convert it into pound and put it into my bank. That increases the pound strength. Yeah. Or I might stick it into crypto, or I might turn it into dollars because it's already been sold off as dollars because gold, oil, commodities and stocks are traded in dollars. So it's been converted into dollars. So I'll keep it in dollars. But the dollar's collapsing. So I don't want to keep it in dollars. I want to put it into another currency that's appreciating. What's going up at the moment? The euro. Okay. So I'll maybe buy euros with it. So everything that gets sold off in these situations, there is always a beneficiary somewhere. When something goes down, something else has to go up equally. It's a zero-sum game because there is a finite amount of capital. When the capital is removed from A, it has to go to B. Think of 2 cups of water. If this one's full of water and this one's empty, if you want to get water out of this, you've got to put it somewhere, here. So this one goes up as this one goes down. This is how the Forex markets work, and it's how all markets work. Same as every market on the planet. Apples. You've got a fruit store. You go and buy apples. The stock of apples goes down. The capital goes up within the apple seller. My stock of apples goes up, my stock of capital comes down. Yeah, it's the same everywhere. So something is going to benefit from all of these drops. What it's going to be will depend on what each of these countries does with their capital, basically, with their retaliation, if you like. So pullback plays at the moment are kind of the thing, or breakouts. If you see something sitting around and accumulating, beautiful rejection there, look. So that's that level holding, which is just above actually. So yeah, pullback plays, basically trying looking for bouncing continuations, that sort of stuff. But you know, nobody's really gonna be able to tell you what's going to work because we don't know what's going to happen next, do we? Euro odd. So COVID back here. Sorry, that's 2019. Yeah, that's 2020, isn't it? March, February. So that's COVID. Obviously this is Trump getting in. Could we? Who knows? Who'd have thought we could have done that? You're not going to get an exhaustion spike of that size, I don't think. Obviously this was a liquidity exhaustion. This was, you know, that is a proper black swan. We don't know, do we? But we're certainly off. So you want to be doing nothing but buying that at the moment. Euro CAD, that's a lot more stable. We have got an existing monthly high coming up, but look, there's a lot of wick to the upside, a lot of wick to the downside yesterday on that one. So pretty stable there on the Euro CAD for some reason. Euro Swiss coming down hard. Swiss franc seems to be beneficiary at the moment. So you look at the Aussie Swiss, big move down. CAD Swiss, big move down. Euro Swiss. Swiss is a safe haven. What do you do when you're pulling money out of stocks? You stick it somewhere safe. Where's safe? The Swiss. Interest rates are going down to 0, which means that you're not going to earn any money. You're not going to lose any money. It's the safest place on the planet to put it. They're not affected by conflict. Economically, they are a banking society, so they are wealthy. Everything's good. That's why it's a safe haven. So it should be the beneficiary. So do not try and sell the Swiss. Euro yen, nowhere. Euro New Zealand, flying. So again, all the Australasian pairs getting absolutely killed today. So we seem to be having a little bit of US dollar strength coming through at the moment. So US dollar index is up today, only marginally, after going down initially. So there is a bit of US strength coming through. Pound, obviously, everything benefiting against the Australian dollar. Again, Swiss franc safe haven run underway. And again, safe haven runs, yeah, can last for days and be huge. If it really wants to go, it'll go, the Swissy. And especially if you get something bad happen. Let's say, for example, Starmer comes out and says, we're going to put another 10% back on the US. And the US turn around and go, well, you can have 20% back. Pound's going to collapse. Yeah, and if this is all still going on with the dollar collapse, the Swiss franc is going to be rallying at the same time. So if a currency drops at the same time as the safe haven run happens, that's where you get the biggest move, which is why the Aussie Swiss today is sitting down all the way down here. The Australian dollar is being sold off dramatically. The Swiss franc is being bought from every direction, and including selling that Aussie, you will be buying the Swiss franc with the Australian dollar as well, which doubles the speed of the move. Yeah. Gold should be benefiting as well. It's not. It's interesting. So the price of gold coming down with the dollar. So the gold used to be a safe haven as well. Used to buy a lot of gold because it is an always in demand commodity. It appreciates in value. It's rare. But, you know, it's obviously in an uptrend. Everything's in an uptrend against the dollar, though. So, and this is basically what this is. It's the gold crossed with the US dollar. The US dollar is diminishing. Gold price should continue to rally. And that's on a pullback at the moment. So, again, look for reversal alerts. As soon as you break structure to the upside, potentially that is going to be the start of the next leg. Look for double bottom bounces on things like that. Well, euro has been benefiting. Yen's still quite strong. Look at the whipsaw on that. Euro, US dollar. So yeah, we got that push coming back in. The pound at the moment, very, very strong. We got the lowest tariffs. I mean, nothing's going to beat the Swissy at the minute, but we got the lowest tariffs, and the yen is still getting some strength. So it is still getting a safe haven run, but a lower extent than the Swissy. So yeah, but yeah, craziness. Just craziness. So New Zealand, Swiss. That's it. Lowest price ever. Mental. But yeah, we'll see what happens. This situation is new to everybody, so it could completely mean revert. We have absolutely no clue what's going to happen with it. So, you know, for me at the minute, I'm just basically reducing risk and staying as flat as possible. So looking at all the stock markets, obviously, the gap down, every single stock market is affected by this. The DAX, obviously, massive motor manufacturer. Motor's been hit by 25%. So that's going to really hurt all German economy because their main export is motor vehicles. So the DAX obviously is taking a massive hit. Nothing but shorts on the DAX basically at the minute. We usually get a gap fill. Every time you get a gap, you tend to get a gap fill. We had one missed there as well, look. But typically gaps tend to fill. Yeah. But we do not typically get gaps that big. Again, this is all new. Those sorts of gaps tend to come when there is a massive world-changing event like COVID, Trump, etc. So, yeah, don't expect that gap to be filled. It will at some point in the future. The stock markets will come back up. If you know, the thing with the stock markets you have to understand is the DE40 is made of the top 40 stocks in Germany. When number 40 drops to 41, number 41 replaces that stock. So the stock market is engineered to go up. They will go back up at some point because there will always be 40 companies stronger than other companies, and their share prices will increase. So the stock markets will always rally. It's just a fact of what stock markets are. At the moment, though, you have other places you would rather put your money than stocks. So their share prices will drop, their sales will drop, their profit will drop, but it will not go. Something will happen and they will change their business plan and their model and they will come back up again, or they will be replaced by a company that is doing that. So trying to pick the bottom in a stock market crash, very hard. So that is the bear market we've just been through. That lasted for 1 year. This bear market, funnily enough, started when Trump got into office. No reason why it shouldn't carry on for the next 4 years. But it won't. It will carry on potentially for another year. So where it will go, Nobody knows. Yeah. When we were, if you were in the live rooms back here, we were trying to pick the bottom of this collapse, and I called the COVID drop as the most likely area for a bounce, because that's where we previously bounced when we recovered from COVID, and that's exactly what we did. That area there, to me, so this low here from September 22, which is when we started the interest rate rallies, or rather we started in 22, is far too far away. The market can't, well, I mean, who knows what it can or can't do at the moment, but it's unlikely it's going to collapse back down all the way to that sort of level. So looking for support, we've got the highs from November 21, which have never been retested. We blew straight through those, but we've got this level here. So this propulsion gap here, which this whole propulsion move from November 23, is a potential downside target. So, look at the markets to continuously drop for the next 6 to 12 months down to that sort of area, potentially. But, again, it's impossible. All you can do is you can place lines on your charts at obvious support resistance areas, and that is where the market will tend to find a bounce point somewhere around. Yeah. So again, we hit that level, we bounced off. We hit that level, we bounced off. We blew through, we bounced off. We smashed through it, we came back, we bounced off. This is a point of interest for market participants. But the thing is different now to then, is the world was in a different place then to now. So why would you buy this bounce when the entire planet is falling apart economically? Yeah. Don't expect it necessarily to hold. But, it's all going to come down to what the tariff responses are from the other countries. But they're all doing the same thing. US dollar's rallying at the moment. Pound US, Euro US. So we've got a move coming in. Look, big move on the US dollar. Stock market's still coming down. Normally you'd expect the inverse, but it's just not the case at the moment, is it? Bizarre. Right, let me just catch up on chat. Yesterday was insane. Never seen anything like it. Nope. NFP potential mean reversion. I don't know. Yes, there's a 50-50 chance, Ryan. You're not gonna mean. Well, I say you're not. I don't know. You're going to find it hard for the market to have confidence to mean revert that quickly. Yeah. Look at the yen intervention. So if you want to compare this to a recent black swan style event, look at the yen intervention, because that is the most recent event we've had that was a mass manipulation. Yeah. There is no mean reversion. Yeah, it doesn't mean revert because it's a changing world order. Yeah, the yen basically liquidated all overseas US assets in one go to destroy the dollar and power the yen up to levels not seen before. You could not do anything but buy the Japanese yen. Yeah, you can't mean revert it because nobody can do the opposite. There's no one there. You can't buy enough. It just doesn't work. Yeah, it's just literally going to collapse. It's going to go the other way. There's not enough liquidity in the market to drive it back in the opposite direction because you just don't. It's like you got a herd of cattle running towards you and you're running the other way. You're going to get run over. Yeah, you can't survive. So that is the most recent event that we've had. And look at the size of that candle compared to what we've just had going yesterday. This is child's play, isn't it? But that's because it's the yen and not the US dollar being the manipulated one. The US dollar is the one that's being manipulated at the moment. So US dollar CAD ADR. So there's a big move come on the US. Nothing. Nothing that's particularly spiking that US at the minute. Something is obviously dashboard. It's just I've never said it off so much. So yeah, this is what happened after that. Yeah. So I don't think non-farm payroll, unemployment figures. So the thing you've got to look at with NFP is people call it NFP, but what you're actually looking at is the unemployment rate. Yeah, it's forecast to stay the same. The reason the market moves on non-farm payroll, or rather on the unemployment rates, is because unemployment rates have a direct impact on interest rates. Yep. So when central banks see unemployment rising or falling, they increase and decrease interest rates to try and stimulate economic growth to employ more people. So they try and control unemployment using interest rates. They try and control all sorts of things using interest rates. It's our main monetary policy tool for keeping everything stable. Interest rates are irrelevant right now because we've just started a trade war internationally. So interest rates are going nowhere but up unless they sort this out. So what does the unemployment rate really have to do with anything now? Non-farm payroll, what does it matter? It doesn't really, does it? Because it's not going to impact interest rates. We use this to forecast what's going to happen to this because this drives the currency price. So if interest rates go up, the currency goes up. Yeah. So, but that is not going to impact that at the moment. So therefore it shouldn't impact the currency, should it? But they do use it as a tool to fill large order volume because they know there's liquidity in the market at that point. So they can dump large orders and get things done, which is why we see the market go mental. It's just volume of orders. There's no directional bias. Unless that is massively different to what's expected, then there will be a shift in bias and sentiment towards a currency. But I don't think it's going to have any impact today. So when you're looking at what's going to happen with non-farm today, I think they may well use it as a continuation tool. I don't know, but I can't see it really having any massive impact from a fundamental perspective. But, we have to wait and see. We've got massive movement on the pound US and euro US suddenly come in. Big spike down there. Again, lit up like a Christmas tree. Almost got a full house yesterday. Almost had every single one lit up. There's only been one time in history I've seen that happen, and it was COVID. Other than that, it's never happened. So we were very close to it yesterday. Morning, Nav. Morning, Dennis. Aussie dollar concerns persist as key Australian trade partners such as China, Japan, and South Korea face steep US tariffs threatening the broader economic outlook. And Australia came out and also said that they were going to retaliate as well. So, I mean, it's an amalgamation of things coming together, isn't it, with that at the minute? But that conglomerate you've just mentioned, China, Japan, and South Korea, basically they are electronics. Yeah. So everything electronic. So so think of the two biggest products on the planet, iPhones, Samsung phones. Yeah. All manufactured in those three countries using chips from those three countries. Those three countries hold the rights to every electronic device held in every hand on every person on the planet, virtually. Do you really think they haven't got the power to screw America if they want to? Turn around, all three of them, and they've already said it. They've already said they've sat down, they've talked it through, they know what they're going to do. They're just going to turn around and go, right, iPhones 400%. What are you going to do, Trump? Right? You cannot buy any other products in the US. They're manufactured in China, Japan, and South Korea. Yeah. So what are you going to do? Shut off communications to the US? No, you're going to drop the tariffs to China, Japan, and South Korea because the rest of the public in your country are going to turn around and shoot you if you do not let them use mobile phones. This is why trade wars do not work, because every time you put something on that, they fire a shot back. You fire a shot back. Eventually, nobody's alive. You can't let it get to that point. So they have more power than the US. The US somehow still thinks they're the leading power in the world. Look at the economics of the planet at the moment. Not the case at all. The biggest land masses are not in the West. They're over there. The biggest populations are not in the West. They're over there. The biggest thriving economies, growing economies, are not in the US. They're over there. Yeah. This is a change in world order, and it's been started by someone who's trying to beat up. It's like the little kid, David and Goliath. Yeah. US is David at the minute. Somehow it's not sinking in that what he's doing is just destroying everything. But it's not our place to, well, it should be the American people's place. I said to my wife last night, why is nobody in the White House at the moment saying anything? Yeah. Are they all sitting there nodding? And under the hood, they're just going, what the? Yeah. I would be. Imagine if our government suddenly said, we're going to put 200% tariffs on everybody in the world. The rest of the government would go, hang on a minute. Why would you do that? Why has no one said this? It's just bizarre. Every economist on the planet is saying the same thing, yet he's done it. And what was he expecting? It to go well? Was he expecting the stock market not to collapse when you destroy every business's opportunity to trade? I just don't get it. But anyway, no one does. But the good thing about our industry is it doesn't matter which way it goes. We get on a direction and we make money. That's it. Doesn't matter whether it goes up or down, does it? You just need to try and get on the right direction. So at the minute, trend traders are going, I told you trend trading worked. Mean reversion traders are getting shot to pieces. Yeah, but how often does this happen? Yeah, realistically. So, but the minute you've got to switch, you've got to be on the other side of the coin at the moment, because you go with the flow, you go with the momentum. The way this market is moving, that's the direction you head. Until it tells you otherwise. When all of a sudden you go like this, and suddenly your P&L starts to go like that, you know the market's starting to return to some kind of norm. Then everything can start getting back into normal flow. But right now, go with the train. Morning, Leshy. Morning, Mark. What about countries intervening in the movement of their currency? So, yeah, the Swiss and the Japanese are the main interveners. They're never, they don't hide from that at all. They talk about it all the time. The Swiss come out in their press conferences after they change their interest rates and say, we will manipulate our currency. We can't do anything about it. So, yes, currency manipulation is an option. The Swiss specifically have the power to do that. The Japanese, not so much. I'm just going to take that one off. Yeah, the Japanese not so much anymore because they've shot their ammunition. So the last intervention, obviously, that was their last shot. They liquidated US assets to manipulate the yen. I don't think they have the power to do that anymore. It is still very low interest rates, so there is a lot of attraction to putting your money there. And obviously, Japanese economy, that side of the world, good. Yeah, so, well, getting better. So, from a manipulation perspective, I don't think anybody but the Swiss has really got the ability to do that. It's a lovely area coming up here, look. So yeah, don't know. Difficult to tell. The US can't do it. They don't have the ability. You can't really manipulate your currency. You need some faith in it for a start, don't you? There's no faith in the dollar at all at the minute, is there? But this can all change on a dime. This is the thing with this type of situation. All all it's going to take is for von der Leyen to come out and say something about the euro. This is our plan and this is what we are going to do with the tariffs. Yeah. Second biggest economy in the West. Yeah. We will do this and stuff you, Mr. Trump. And suddenly the whole thing flips on its head. And everyone goes, well, if they're going to do that, the next move from the dollar is this, which means that the dollar may well be able to strengthen again. Yeah. But this is the news feed is going to be, there you go. Traders add to ECB cut bets, fully price 3 more this year. Who are these traders? This is what I want to know. They always say this. I hate this thing about financial juice. Who are they? Is that me? Is it you? Or is it the head of Goldman Sachs? Who is it? Who is these traders? It's far too broad. Yesterday you had one of the biggest investment banks on the planet saying that the interest rates were not going to change in America. And then 24 hours later, you've got traders saying there's going to be a 1% drop in Fed rates. Yeah, I trust the guys in the biggest institution on the planet rather than traders. So traders think that the euro is going to drop its interest rates. Right? So if, and then this is another thing as well. Interest rates are used to control inflation. So think about this as a scenario. Historically, what we've done as a planet, most countries, apart from Japan, have used interest rates to control economic growth, which is inflation, basically. So as things go up in price, they need to be brought down so that we can afford them. So we either need to put up our salaries or we need to bring the prices of things down. So we can control inflation to either make more spending or make more saving. That's basically what inflation is. It's a control of spending and saving. So it controls the flow of money and it controls the everything that happens within an economy to keep it stable. So what if we stop using interest rates to do that and we use trade wars to do that instead? What if that's now the new plan? Why don't they just cut the rates straight down to 0? Yeah, could that be the bomb? Nobody knows what this huge nuclear bomb that European Union have come out and said, we've got this thing we've been planning in case this happened, and it's big. What if that's it? We're dropping interest rates down to 0.25%. Yeah, house prices are going to go through the roof in Europe. Everybody is going to liquidate all of their savings and put it into assets, probably start businesses, drive the economy up, and all of a sudden Europe flourishes and destroys America. Economically. We don't need interest rates anymore. Yeah, all the banks borrow at flat rates and they make money on commissions doing other things. Yeah, this is the sort of stuff that can change. Yeah, interest rates didn't used to be a thing 100 odd years ago. Didn't have them. Didn't need them. Banks have always had rates for borrowing, but not in the mechanism wasn't used in the same way. So these traders maybe know more than we do. It's based on the interest rates futures, therefore they call it traders. Oh, okay. So that's what they call the traders. Are they fully pricing in? So is this is the thing with all these signals you get. So when there's a certain amount of movement in an index on anything, it signals what is likely to happen based on history. Yeah, look at an RSI. When the RSI gets above 80 on the 4-hour time frame, it signals that there's a higher probability of it coming down. Why? Because that's what it's always done. If they are doing a certain thing in interest rate futures at the moment, probably selling them off, I guess, that sets off a trigger that goes, last time this happened, and when this happens normally, what it signals is this will happen in the future. ECB will be looking at that and going, no chance. Inflation's going up. But the signals will be telling you something else, which would that would make sense of what we're seeing here, wouldn't it? With this, traders boost Fed bets, fully price 100 basis point cuts this year. Go back. Yeah, A human being in here somewhere. Oh, there's so much news. There's just so much news. I'm not going to be able to find it now, am I? A human being in a company that is well respected said that wasn't going to happen. You see, this is the thing. Look, this is obviously a signal, isn't it? Yeah, it's a signal because the signal has changed dramatically from 24 hours, less than 24 hours ago. The signal was that there's a 50% chance of a fourth cut this year. Now there is a 100% chance of a 1% cut. Yeah, it's a signal that's being fired off based on volume and movement within an index, within the futures market. It's an indicator. Yeah. What did I say at the beginning of this stream? Every indicator on the planet is totally useless right now. Yeah. ADR is fantastic. It's really reliable. At the moment, it's absolute pile of crap. No point in using it. It just doesn't work because this is not normal. You cannot. ADR didn't work here. ADR is not working here. ADR worked absolutely fine all the way through that 6-month period. But that didn't work. That didn't work. So you had 3 weeks there where ADR just wasn't going to work. Squeeze, we call it. Squeeze. It doesn't work in squeezes. Yeah. These signals, I'm not convinced are going to work. I don't think the Fed are seriously sitting there going, hey, the whole economy is collapsing. Do you know what we should do? Drop the interest rates because inflation is going to go through the roof. Yeah. It's totally the opposite of what the central bank's job is. I might be wrong. It might all be changing. Yeah. But I don't know. I just don't think you can really trust anything you see at the minute. You know, Lagarde came out in her last press conference. Go and look at Lagarde's press conference from 2 weeks ago. If you can find financial juice from then. Yeah, look at Lagarde's. That's not it. Where's the euro rate gone? Was it 2 weeks ago? Week before, wasn't it? It was the SMB. Oh, no, I've gone back. But whenever it was, Lagarde. God, I can't remember when it was. But you go and look at her press conference statement. They're not dropping interest rates in Europe because they've got it to a point where it's nice and stable. Everything is kind of getting, this is what I'm saying. We're just about getting back to where we wanted to be from 5 years ago when COVID hit. Yeah. So we've got a point now where we can start to level off and then plan for the future. Don't think you can trust anything. Lagarde is certainly not saying that they are dropping interest rates. She said they're going to stick where they are. So maybe someone somewhere in the futures market knows something that the rest of the world doesn't at the moment, and Lagarde has leaked it. But other than that, I wouldn't trust anything that says. Yeah. 3 more. That's not what she said. So I trust Lagarde. Wait for her to talk. Are you out of your US dollar Swiss? I am. I'm out of everything. I'm flat. Long term, I'm flat. I'm not position trading at all at the minute. I've got nothing on. I'm short term. I'm scalping basically at the moment. Nothing but scalps. So yeah, short term trading, low risk. Yeah, I'm not ORBs and low risk scalps. God damn. Let's see what SIH is doing today. Got a problem here. I got 1 short and 2 longs on the DAX. We've misfired this morning. I'm going to try and get out of this today. Too much volatility at the open, unfortunately. It's screwed with it today. This is going to ruin my P&L today. 5 solid weeks, huge gains. It's the first red day, so I need the US indices this afternoon to come to the fore and sort this out. I need the US indices to really kick off this afternoon, make me some money. Be disappointing to have a red day. Pound Swiss pulling back at support, look. You know, so this you got a mean reversion opportunity here. I mean, reversal alerts today. I mean, the chances are that every reversal alert you get is going to be quite a full-on pullback, because obviously the speed of these downward movements is so huge. The buyers, there's no buyers in the market. Like you can see, there's literally block of buyers, block of buyers, block of buyers, block of buyers, huge blocks of sellers. Yeah. So obviously the way that reversals work is you break structure to the upside. Yeah. By the time you've broken structure to the upside, this next batch of sellers is ready to come in. So, you know, indicators, technical levels, momentum. It's all about momentum at the minute. Momentum breakouts is where you want to be. So when stuff starts moving fast in one direction, propulsion gap indicator actually is probably your best friend at the moment. Yeah. If you see a propulsion gap form on any time frame, really, whatever time frame you're trading, it doesn't matter. If you go down and trade on lower time frames like M15 or something like that, you see a propulsion move start, get on it. Yeah, assume that every propulsion gap that is painted at the moment is not going to be filled. If it comes back into it, sell it inside it. Yeah, that's the sort of play. So where we are now, look, on the pound Swiss. Yeah, short. Tiny stop loss. Even if it gets down to the low of the day, another 1 15-minute candle to the downside, your risk reward ratio on that is going to be something like 4 or 5, isn't it? That's the way to do it at the minute, because these moves are so fast. You just jump on and you jump off really, really quick. It's basically what this strategy does that I'm trading at the moment. It's a breakout strategy. We just get on the break and we hold the break, because that's what it's doing. It's just breaking and holding. It's breaking and holding. It's breaking and holding. I'm getting chopped around loads. Well, I'm not getting chopped around loads today, but you have periods where you get chopped around. Yeah. But then it will break, and when it breaks, and this is the thing at the moment, it's the market is breaking. It's not individual currencies, individual stocks. It's all breaking at the same time. It's like a piece of news comes through and all the institutions are just driving that money through whatever markets they're in. They are moving it. Everything moves at the same time. There was a point yesterday where I was trading on this is what I'm trading at the moment. Gold, oil, Dow, everything moved at the same time. It's like seemingly totally unrelated. Commodities, currency pairs, and stock market all suddenly go at exactly the same time. So you sit around and you get a little bit of profit, a little bit of chop, a little bit of profit, a little bit of chop, a little bit of profit, a little bit of chop, and you get a bang. That is how you make your money at the moment. You get that bang and you bank it. Yesterday's moves that I banked yesterday at £271, that all came pretty much off the same move. Can't see it. It's further back. But it was basically one move in the market. And I went from being sort of flip-flopping between 50 to £100 in profit to suddenly whoop, done for the day. One breakout move. That's it. Done. But everything is doing the same thing at the same time. It's just a strong move that comes in everywhere. 225 weekly range on something. Everything. There you go. Propulsion gap hold. Look. Yeah. Nobody knows what to do in this. You've got to make it up as you go along, but just make sure your risks are lower than your rewards and you'll be fine. I put some more in the Discord to the trader pricing of the interest rates. All right. Yeah, so that is exactly what I just said. That is based on historical information. With this is normally that would be, yeah, makes sense, but right now that makes absolutely no sense, that chart, because it's a technical indicator. So technically, when something happens, another thing happens. The things that are happening at the moment are not going to drive this. So when you get large sell-offs or buys in the interest rate futures markets or in any futures or options markets, the Fed or central bank tends to respond to that, or something the Fed or the central bank does causes that. At the moment, we are seeing mass migration from market to market because of panic. The Fed aren't going to suddenly do something because of someone else's options or futures positions. That isn't the case, because the Fed have to do what they have to do to balance the economy. If the traders are selling the crap out the futures interest rates market, the Fed don't have to drop interest rates. The Fed will do what they need to control and stabilize the economy. And if it isn't that, they won't do it. So this is an indicator, the futures market, as to what is normally happening in economics. Yeah. No one on the planet is going to turn around right now and say, this is normal economics. This is normal. That's not normal. Yeah. So don't pay too much attention to that. I mean, it doesn't help you in any way, shape or form predict the future anyway. Because when you get a massive sell-off in something, one of two things can happen. It either will mean revert or it won't. So it doesn't help in any way, shape or form. No indicator is any use to anybody, is it? Because all indicators do is tell you something that's just happened. I know what's just happened. I want you to tell me what the future's going to hold. This is why we sit and we watch press conferences and we listen to the Fed and Lagarde and Bailey talk, because they tell us what's going to happen in the future. If I want to make money on a US dollar movement, I need to know which way the US dollar is going to move in the time that I'm looking to make money. If the Fed come out and say, if Powell stands there and goes, at the moment it looks like inflation is sticky, therefore it's unlikely we will reduce interest rates, I know the dollar's unlikely to go down. So I know what to do in the future. If they sell the crap out of interest rate futures because they're thinking, I've got to get out of this market, that has no bearing on the Fed dropping interest rates. The Fed will do what the Fed needs to do. It's an indicator, so it's not any use. Short, long term, no one knows what's going on, do they? So beautiful rejection on the pound Swiss at support. It's daily support. So if support resistance is still a thing, this is a great place to buy. Is support resistance still a thing? I don't know. You fancy a mean reversion? Get on it. If you don't, sell it. I'm still holding my euro odd positions with my initial entry around 166.270. Bloody hell. Hoping it will drop soon. If you look at history, yes, it will. But well, I don't know what history's got to do with the current situation we're in, if I'm honest. I'd get flat, take the hit, or draw a line in the sand. With these types of situations, what I tend to do is just draw a line in the sand. I either reduce the equity in my account so that I get margin called, or I would say if you're in this sort of situation, you've got two options: place a stop loss or get a margin call. So take a last ditch attempt to short it and get out if it goes any further, because if it goes further, you're unlikely to recover. The thing you've got to think about is we've got now until next Wednesday. That's when the official announcement at the moment, as it stands, is coming for the euro to announce their retaliatory tariffs. Depending on what they do, it's more likely that it's going to strengthen the euro than weaken it. But you've got two players here. You've got the euro and you've got the Australian dollar. The Australians could turn around and do something tomorrow or this afternoon to massively strengthen that euro, that Aussie dollar. So you could be back down here because of what the Aussie dollar says at some point this afternoon. Unlikely, because they're all asleep, but or going to sleep. Don't know. There's no way to deal with this situation. If you look at every big move that we've ever had, there's always a mean reversion on it. I've said this in here for 5 years, and I will never stop saying it. The market will retrace 50% of its move every time. Prove me wrong. No one can, because it has 100% of the time in the history. That's it. Always does. There's never you can't show me a chart that hasn't got a 50% retracement on it. What you don't know is when the retracement comes. You don't know how long that lasts. It will always do that. At some point you will get a 50% retracement on a move. You get the odd time where it will do a 38. But it doesn't matter. 38 is more than enough to get out of any position. But this is not history. This is new. I don't know what's going to happen here. Collapses happen very, very fast. Regimes fall very fast. World events change very fast. Combat starts very fast. Things change very, very quickly. And you can't hold on forever in things. You have to be able to adapt to what the market is doing. But, even this massive move here, you got 38 retracement there. 38 to 50%. So all I would say is if you're in here short, and you didn't get out on the 38 retracement, the first question is, why didn't you get out on the 38 retracement? But if that is now your move, literally just stick a fib on it. The trade is wrong. You are wrong. It's not worked out. So place TPs here. Whether that is your average or that is your average, place your TPs there and just get the hell out. If you can. That's all you can do in that situation. It doesn't matter how much you risk or how little you risk or what you do with any kind of strategy that is long-term hold. There is got to be an exit strategy of some description, and it's normally a percentage of your account, typically. But it all depends. Everybody's different. Everybody's got a different situation. Some people are trading one strategy. Some people are trading 5 strategies. Some people have had amazing years. Some people have had crap years. Your decision-making process is going to be different depending on what's going on with you. I've absolutely killed it this month. In March. Absolutely killed it. I had the worst month ever position trading. I had my best month ever scalping. Because while the market was going parabolic, I was scalping the crap out of it using OLB and using breakouts. When the market is flat, position trading kills it. But the other strategies don't do very well. But this is what it's all about, diversification. But you've got to pull the plug at some point. You've got a propulsion gap that is being tested right now, look. It's really old, and it's actually part of an A-shaped recovery, so I wouldn't even call it a propulsion gap. It's not really a propulsion gap, is it? It's just part of that move. But yeah, got to just dump it at some point. But this is the thing at the minute. So I'm saying this, right? You can hold it, you can dump it. It's your choice. It's your money. But at the end of the day, this afternoon or over the weekend or on Monday, either the Europeans, the US, or the Australians could say something which 100% reverts this entire thing. Yeah, there's a 50-50 chance of this thing going further or coming back down. Those are the odds. One of those two things I can tell you is going to happen with 100% certainty. It's either coming back down or it's going to break that high. It will do that, guaranteed. It can't do anything else. You can sit around for 6 years, but it will at some point break that high or drop. Those are your odds, 50-50. Every time you enter the market, the odds are exactly the same. Your job is to extract money out of that movement. New Zealand dollar CAD, 200%. Another one. So this New Zealand dollar, Australian dollar, New Zealand dollar, just falling through the floor. Look at it. Death. Death to the Aussies. Taiwan Premier. Tariffs have a significant impact on Taiwan's electronics exports. Yeah, we know that. You're a bit behind the curve, mate. We knew that when he announced it. How much are you paying for swaps? Oh, what, an Eri on that one? Yeah, Euro odd. Euro odd short swaps. Not that bad. 440 for me anyway on Robo Forex. Not that bad. Not great, is it? But it's a month and a half hold, isn't it? Really. So those swaps build up. It's becoming more and more difficult to hold long-term positions since the yen intervened. They've really upset the apple cart with that intervention, because the safe haven carry trade, which was the way that banks and institutions tend to offset their costs, isn't there anymore. So I think it's just affected everything, that move. We've had such a choppy market, such a squeezy market in the last 6 months. Swing trading and position trading is becoming more challenging in this market, much more. Just going to get rid of that euro pound. Going up there. I might as well have removed the ADR indicator off my chart. It just means nothing at the minute, does it? Pointless. Pointless. Right. So yeah, that's all I got for you today. I say all I've got for you today. It's a long session on what the hell. We just don't know, do we? So at the minute, it's just a case of holding on tight and just take opportunities. So price action, levels, don't know about levels, but price action for me at the moment, momentum for me at the moment is the only thing that really is going to work. So when something takes off, get on and hold on. Everything I'm doing at the moment is using, as you can see on the chart here, trailing stops. So I'm using 10% of ADR as a trailing stop to 20% of ADR as a trailing stop, and I'm assuming things are going to go beyond ADR. So if it's not pulling back 10 to 20% of ADR, I just stay on it and just ride it. When the market starts to go back to being more of a choppy market, it will become more difficult to make money, obviously, with breakout strategy. But when breakout strategies are turning into short-term intraday trends, that's what you need to do. Just jump on them short-term and get out. Time frames M5, M15. Yeah, and just try and grab as much as you can out of anything that moves. Just make sure you diversify as well at the minute. So I'm trading gold. I don't trade gold normally, but right now gold is the thing that's going to move, isn't it? I'm trading oil. I'm trading stock markets. I'm trading FX. But I'm trading diversified FX, so there's not a lot of exposure on one currency. US dollar Swiss hits 588 yesterday. Was it 588? Yeah, I know it was over 500. I measured it yesterday while I was shouting at Trump on the telly. My wife hates this because I just talk about it non-stop. Every time the news is on, I talk about it, and she hates it. But anyway, lovely move on gold, look. That means there's a strong US dollar. Stronger US dollar. Starting to beat the Swiss back as well, look. So we've got a move trying to start on the dollar. If you're looking at yesterday's price action on the dollar, on anything dollar related, I'd be looking for support resistance areas on the dollar, on anything. When it gets to some support resistance after what happened yesterday, I think there's going to be a very strong urge to maintain this move. So if we get down to here, you know, and sort of bounce around a little bit, break of the opposite side. Bear in mind, obviously, we've got non-farm payroll. So, yeah, I will be flat for non-farm as well. Not going to try and get involved in that, just in case. Be interesting to see how far we move on non-farm. What's the time? What time is non-farm? It's 1:30, isn't it? I might do a stream for that. I might do an impromptu stream just to watch it. It'd be really interesting just to see what happens. So I might do a stream on that this afternoon, 1:30. Somebody doing it. I shall be watching it anyway, so might as well watch it on stream and we can all laugh at what's happening. Could take some funny trades or something. Say funny trades, just try and take some trades. But anyway. Right, I'll leave you there. Good luck with everything. That's all I can say. So yeah, I think I'll do one. I'll post it out. I'm going to do a stream at 1:30. I'll do non-farm this afternoon. So yeah, good luck at the minute. That's all I can say. It's one of those things where you know, we're in a situation we've never been in before, so you just have to sit there and go, let's try this. But the advantage you've got is the market's moving so fast. If you try something, it's a high probability it's just going to work, because it's just moving like a crazy thing, isn't it? That gold is pulling back. I'm just going to grab that while I got it. Right, I'll leave it there. Yeah, so I'll be back at 1. I'll come on about 1:20 this afternoon. I'll post it in Discord and Telegram. I'll pop a post out on it. Yeah, and we'll watch it. I'm just interested. So we might as well watch it together. Interested just to see what happens this afternoon, because this could be the start of phase 2 of the bloodbath, or it could be the start of a complete and utter reversal. Either way, I think there's probably something going to happen, isn't there? So either that, or the banks have just run out of money. They're going to be completely illiquid and it's not going to move at all. Who knows? Right, I'll see you this afternoon. So if you're around this afternoon, 1:20, we'll do a stream. If not, I'll be back on Monday. Have a good weekend otherwise.